let's talk about the Donchian Channels. What is this indicator? Why is it so loved among traders? Either if it's to spot volatility, breakouts, and given range of the market. So first of all, where do you find the indicator, and then how do you use that? Under the indicator section, you go to the volatility, and the Donchian Channels is going to be here with a default of 20 periods. Why it's important, and I'll show, of course, how do you adjust it and what does it mean to you. You can, of course, design the levels, the style, the thickness, choose the visibility where you want to see that and on what chart types, and of course add levels if you would like. Click OK. I already have that on my channel, so I'm not going to duplicate it. So the Donchian levels are used, basically they create some sort of a boundary. They show in a very simple visual way the highest high and the lowest low of a selected period. So in our case, it was 20. Now, if I want to adjust here and I want to do it 50, look what happens. Okay? It expands, right? Because we are looking at a broader scan of the highest high and lowest low. It definitely expands. And if I go smaller numbers, what happens is it shrinks. So 20 is by default, and from my point of view, there is no need to change in default, maybe in a certain market conditions, but what's good for the creator, good for us, the traders. So the traders love to use this indicator to spot the volatility, to spot shifts in market directions, to spot breakouts in potential trend directions. So how is it actually done? When the price goes above the upper band, especially, and I'll show it here, when prior the breakout, the range between the upper and the lower band is narrow. Okay, the pressure then is much higher rather than when the range is very big, right? So when the breakout happens out of the upper band and you see the price closes above the band, it signals a bullish momentum. Buyers are likely stepping in the game, and very possibly they will take the control from here. And the same happens with the opposite. When the price goes below the lower level, that usually indicates that the sellers step in the market and are about to take the control. Just pay one attention to if the breakout happens after a narrow distance between the upper and lower band or a wide one, because when it is wide, like in that case, and then the breakout happens, most of times there is no guarantee, but most of times we would experience a pullback first prior the trend continuation. So this is the most common use for that, but also after several rides, after several breakouts, like for example, break to the upside, break to the upside, break to the upside. Then traders love to trade in between the boundaries, expecting the price to move here and sort of slow down. And also here, break to the downside, and then the traders would use that zone as consolidation when you can see the Donchian levels going flat and even shrinks a little bit. These are the most common uses for this fantastic, from my point of view, indicator.